Hey, how are you? This is Mark Fuller, Manager of Wealth. Just wanted to give you a quick shout. Wanted to let you know that even with everything that is going on right now, and I hope everyone out there is being safe, I hope you and your families are well. I want you to pay strict attention to what is going on in the financial markets. And in particular, if you are a property owner, if you either have owner occupied property or if you have investment property, I want you to immediately consider your equity position and protecting the equity in your property and separating that equity from your property, or at least looking at how you could drastically lower the interest rate terms and payment before all of the lending guidelines shift. So right now, because of the upheaval in the financial markets, what you're going to notice is that even though you saw the Fed lending rate lowered to almost zero, it seems almost every week the government insured loans, the interest rates keep going higher and higher. Why is that happening? It's happening because they're coming under more pressure because the government is insuring these loans. There are more defaults coming on the books. There are more forbearances coming on the books. And with that, the pressure on the government to insure the mortgages that were underwritten under their guidelines is getting greater and greater. And so when those mortgages have to be sold on Wall Street, they're looking for a higher rate of return than those mortgages we're currently paying. And so when nobody is buying those mortgages that these companies originate at 3%, they have to raise the rate to 4%. If they don't buy at 4%, they have to raise the rate to 5%. That's how it goes. So you really want to look at making an adjustment. Another massive opportunity in the market right now is that conventional rates are so low that you might want to consider refinancing your loan to a lower interest rate and a shorter term, possibly. Why? Because right now the interest rates are so low, you may have a mortgage where if you refinanced your loan from a 30-year to a 15-year, the interest rates are so low, your payment may be about the same or even less than you're currently paying now. Do not miss this opportunity because it is not going to last very long and the guidelines are ever changing. I cannot stress that enough. When situations like what's going on in the United States happen and what's going on around the world, these banks get very skittish and interest rates go all over the place. But even more important, lending guidelines tighten. So if you're in a good position from an equity standpoint, from a credit standpoint, and an interest rate standpoint, you may want to look at looking at what are your term options. Can you adjust your loan to a 30-year, from a 30-year to a 20-year, or a 25-year, or a 15-year at a lower interest rate that makes your payment go down and the term go down. I'm seeing a ton of those loans being done. If you have any questions, certainly reach out to Omar Smith. He's our residential agent. You can reach him at 443-271-5952, 443-271-5952. It's Omar Smith. Again, check your options. It's important that you check your options because things are getting really crazy in the mortgage market. And with forbearances skyrocketing right now, when this coronavirus has passed, you are also going to see foreclosures skyrocket. This is Mark Fuller from Manager of Wealth. I hope you're having a great day. Stay safe. Bye-bye.